Good evening. This is Ken Long from Tortoise Capital Management on December 27th, 2010, with a series of excellent intraday trades to share with you using the maximum pain technique intraday. And what we're looking at right now is symbol QLD, which is the double long NASDAQ 100 ETF. And we're looking at 3-minute charts. 3-minute candles, and what we have arrayed on the bottom is the Williams percent R10, and then a MACD histogram using the default settings of 9, 12, and 26. And what we witnessed this morning was, we had a close at about 82.30 from Thursday, and then a big gap down, and then a harsh sell-off down to about 80.50. And so what that means is Williams percent R is going to quickly go to an extreme condition, and that's the first part of our 3-part setup, and highlighted in the green. The next thing we're looking for is an uptick in MACD histogram, which we got in this green area, which corresponds to this consolidation pattern at the end of this red Niagara, this maximum pain condition, this harsh sell-off. And then the third part of our setup then is a breakout on the 3-minute candles. And so what you see here quickly is QLD starting to take off, which triggered entries for us at 80.76, at 80.85, and at 81 even, in each case using a 10-cent initial trailing stop. If you're risking $100, that means a position size of 1,000 shares is warranted. And so by the time we get priced to 81.13, things are looking pretty good. That looks like it's going to be a very good trade. Slightly afterwards, we get a fourth signal. It just kept, there was a little pullback here that you can see, and then it kept going up. So we re-entered at 80. Not re-entered, but we added a fourth position at 81.18, again with a 0.1 initial stop. We got about another 10 minutes of joy to about 81.30 at the peak, and then inside the red circle with that candle, the red candle, and starting to get the long tail, SPY had started to level off, and so we wanted to bank, and we ended up getting exits at 81.30. We took off 2 positions at 81.27, and then we took off 1 position at 81.21, and netted 12.5 R for about a half an hour in the market, and that felt pretty good. Moving on, after that peak, it pulled back. I saw a Williams percent R rolling over and coming down, but I tried a re-entry to front run. I was thinking that this would be a big gain, measured pullback, and start to run up. SPY was starting to curl up at that moment, so rather than waiting for that WMD or WMB setup that I just described, I tried to front run that, and I failed. That was at an entry at 81.18. As it started to fail on this big red candle, I didn't like that, wasn't doing what I wanted, so I exited at 81.13 for minus 0.5 R. About 10 to 15 minutes later, the 1, 2, 3 setup, that WMB setup again. We have Williams percent R in the green at an extreme condition, followed shortly thereafter by an uptick on MACD histogram after this consolidation phase. And then the third part, the breakout on the candle, we get an entry at 81.1 with an initial stop of 0.1. By 81.21, 4 minutes later, we can get to no lose, and so we have about 3 or 4 minutes of open risk. That move ends up being about a 1R trade as it started hesitating shortly thereafter. On the next leg, that you can see that was this move inside here. It ends up being a 1R. Now about 10 minutes later, we have another 1, 2, 3 setup again. We have Williams percent R has pulled back now. We get the extreme condition. Shortly thereafter, we get an uptick on MACD histogram. A better entry would have been here on this breakout. I wasn't very sharp. I waited until this breakout here, and so ended up getting an entry at 81.35 with an initial 10-cent stop. About 3 minutes of open risk, get this explosive move up, and then in this long shelf period here, I decide, well, it's time for me to start doing a little writing. The market seemed to be pretty quiet, so I took half a position off, just in time for it to take off. And then when I looked up from my writing, I see it's at 81.90, and my trailing stop had followed it all the way up. And I realized, well, hooray for that decision, but I wish I had been paying more attention, because there were a couple spots in here where I would normally cycle in. But I decided to go ahead and get another position on inside that run to see what might happen. And so I get entries at 81.80. Get it at 82, at 82.20, and at 82.40. It just kept going, in each case with a 0.1 initial stop. And so by the time we get up to this moment here at 82.50, we ended up taking off all those positions between 82.50 and actually, well, we took off 3 there, and that's what gives us an additional 8R just in this part of the move, and holding a 10R from the initial position that we had put on back down here. We ended up getting out of that one at 82.50 because that was pretty much a sideways move for the rest of the day. And so between those two moves, we had 12.5R minus a half R, that netted us 12. An additional 1 is 13. Plus 18 here is 31R. And that's the good news. The bad news is that if I had been paying more attention and had been more aggressive, there was probably another 30 or 40R inside there. So I left way too much money on the table inside this move, but I'm pretty happy with the 30R trade. Intraday, with minutes of open risk at any given time, in a very broad sector of the market that we were expecting to have positive moves in, and with really poor execution on my part, still turns out to be quite a nice move. While the market itself is in bull quiet and is as quiet as it has been in the last year. So I don't necessarily subscribe to the idea that quiet markets don't permit effective trading during the day. So that's the 1, 2, 3 technique, or what we're starting to call the WMB, the Williams percent R, the MACD histogram, and then a breakout on the candles. WMB also could be will make bank. So have a good holiday season, and come join us sometime in the chat room. This is Ken Long from Tortoise Capital. Keep your powder dry, and we'll see you on the objective.